All right, so today we're diving into an article from The Motley Fool,
Okay.
and it's a recent one. This is from March 23rd, 2025.
Very recent.
Yeah, very recent. And it makes the case for buying stock in Dutch Bros.
Interesting.
Yeah, the coffee chain that seems to be like popping up all over the place these days.
Yeah, they're expanding pretty rapidly.
Yeah, so if you're interested in like learning how to think about companies that could be good investments, particularly ones that are like consumer facing, like Dutch Bros,
Right.
this deep dive into the Motley Fool's logic should give you a good starting point.
Yeah, I think it will.
Just keep in mind, this is a free article on their site.
Right.
So it's just one perspective within their broader investment advice.
Absolutely.
So yeah, what we want to do today is really like break down the why of this recommendation.
Okay.
What are the main reasons the article is saying, hey, Dutch Bros might be a good stock to look at right now?
Right.
So the first point they make is what they call strong execution in a desirable niche. So let's unpack that a little bit.
Yeah.
What does that even mean for you?
Well, it's interesting because they're talking about Dutch Bros, competing in the coffee market, which is a pretty established market.
Right.
We have big names like Dunkin' and Starbucks.
Huge players.
Huge players.
Yeah.
And so it's not like they're coming in with some brand new thing.
You're right.
They're coming into a space where people already have their favorites.
Exactly.
But the article makes a point that I think is key, which is that coffee is not really a fad.
Right.
It's like a daily ritual for a lot of people.
Yeah. It's a staple.
It's a staple, and people are willing to, spend money on it.
Yeah.
They're willing to wait in line for it,
Yeah, absolutely.
which is always a good sign when you're looking at a market like that.
Right.
It means there's demand there.
Exactly.
So Dutch Bros is tapping into that demand, and it seems like they're doing a pretty good job of it.
Yeah, they are. The article points out that their same-store sales have actually grown in 7 out of the last 8 quarters.
Wow, that's pretty consistent.
Yeah, so that seems like a pretty consistent, thumbs up from their customers.
Yeah.
Like people are enjoying the experience.
They are, clearly.
So now let's dig a little deeper into the numbers.
Okay.
The article mentions that the number of transactions they had actually dipped in 2023 by about 4.5%.
Oh, interesting.
Yeah, and they attribute this to the fact that Dutch Bros actually raised their prices that year.
Makes sense, probably in response to, all the inflation that was going on.
Exactly. So, like, everything was costing more, for them to operate.
Yeah.
So they had to raise prices.
Right.
So while customers were spending a little bit more per visit,
Right.
there were actually slightly fewer overall purchases.
Okay, so that makes sense.
Yeah, and here's where it gets really interesting.
Okay.
Especially for, someone like you who's, watching how these companies adapt.
Yeah.
In 2024, according to the article, those transaction numbers kind of leveled off. They were only down by like a tiny 0.1%.
Wow. So they basically stabilized.
Yeah, so what this suggests is that Dutch Bros managed to like thread the needle.
Yeah.
They increased their prices.
Right.
And for the most part, they kept their loyal customers coming back.
Yeah, that's really hard to do.
Yeah, that's a tricky balance to strike.
It is. You alienate your customers if you raise prices too much.
Right.
But if you don't raise them enough, then you're not making enough profit.
Exactly.
So it seems like they found that sweet spot.
Yeah, it definitely suggests to me like a strong brand connection,
It does.
and a perception of value that allows them to, maintain that customer base, even with the higher prices.
Yeah, absolutely.
Yeah.
I mean, if people are willing to pay more, it means they really like what they're getting.
Exactly. And this is where the article, I think, brings in a really telling comparison point.
Okay.
To kind of put this into perspective.
Yeah.
They compare Dutch Bros to Starbucks,
Okay.
right? Which is obviously a much
Much
larger
larger.
and more established player in the coffee market.
Right.
And Starbucks actually saw their same-store sales decline by 2%. Oh, wow.
And their transactions fall by 4% in 2024.
Okay.
So,
So they were hit harder, it sounds like.
yeah. So while the coffee market as a whole, might be facing some challenges.
Right.
It seems like Dutch Bros is navigating them, much more effectively.
Yeah.
And even like outperforming a giant like Starbucks on some of these key indicators.
That's impressive.
Yeah. So that's really the core of their first argument
Okay.
for you to consider Dutch Bros.
Right.
They're not necessarily offering some revolutionary new product,
Right.
but they seem to be running their core business very well
Yeah.
within this reliable coffee market. And importantly, they're gaining ground on a major competitor in some significant ways.
Makes you wonder what they're doing differently,
Yeah, like what is it about their customer experience or their brand appeal that's resonating so well?
Exactly.
Okay, so that gives us a good base. you know.
Right.
The second reason the article suggests looking at this stock is their rapid new store expansion driving growth. Okay, so this is more about the expansion side of things.
Exactly. It's like a more direct and visible way for a company to grow their revenue.
Right. I mean, you can only grow same-store sales so much.
Exactly.
You have to open new stores if you want to really increase your overall revenue.
Exactly. And so the article emphasizes that the main driver behind Dutch Bros' impressive revenue growth is this aggressive strategy of opening new locations.
Makes sense.
So if you're tracking growth stories, this is something to pay attention to.
Right.
And the numbers are pretty eye-catching. They opened 151 new stores in 2024.
Wow, that's a lot.
That's an 18% increase in their total number of locations, bringing them to 982.
Yeah, you can't miss them. They're popping up everywhere.
Exactly. Yeah. And while that 5.3% growth in same-store sales in 2024 is respectable,
right,
the article makes it clear that the massive 32.6% overall revenue growth that they achieved that year was largely powered by these new store openings.
Yeah, each new location is basically like a new source of revenue.
Exactly, and they're not slowing down anytime soon. The article mentions their plans to open at least another 160 new locations in 2025.
Wow, so they're keeping the pedal to the metal.
Yeah, they are. So that's projected to be another 16% jump in their store count.
So this expansion is clearly like a core part of their strategy.
Absolutely.
It's a huge part of their growth.
Yeah. So what stands out to you about this rapid expansion, especially for someone who's trying to understand a company's growth potential?
I think what's remarkable is just the scale of the ambition.
Yeah.
Relative to their current size.
Right.
Adding another 160 stores on top of what they already have, close to 1,000 stores,
yeah.
That's huge. And it shows a real commitment to growing their physical presence, reaching new customers.
Right.
And for someone looking at potential investments, this kind of rapid expansion can mean big revenue growth in the near term.
Right.
Assuming, of course, that these new locations do well.
Right.
And it also suggests that they see a lot of potential demand in the markets they're entering.
Exactly. Okay, so we have a core business that's performing well, lots of new stores being built.
Yeah.
The third reason the Motley Fool article presents is the long runway for future growth.
Okay, so this is about looking even further out.
Exactly.
Okay.
This is about the potential beyond just the immediate future.
Right, the big picture stuff.
Yeah, and this is where they really try to paint a picture of the larger long-term possibilities.
Okay.
And they draw a comparison to Starbucks, which has this, massive global presence with over 38,000 locations.
Yeah, it's hard to even fathom that many stores.
I know, right? And Dutch Bros with under 1,000 is still tiny in comparison.
Tiny.
Yeah, so the difference in scale is kind of hard to grasp.
It is.
And the article points out that even if Dutch Bros were to reach just a quarter of Starbucks' current size,
okay,
that would still represent huge growth from where they are today.
Yeah, massive potential.
So it really gives you a sense of the potential scale of this company.
Absolutely.
And it's not just about the number of stores.
Right.
The article also highlights that Dutch Bros currently only operates in 18 U.S. states. So there's a big chunk of the country where they don't even have a presence yet.
Right. So there's room to grow just within the U.S.
Exactly.
Before even thinking about going international.
Exactly. And when you think about the logistics and the time it takes to expand like that,
yeah,
it suggests a growth story that could play out over many years.
Right. It's not going to happen overnight.
Right. And the article does briefly mention the longer-term possibility of international expansion.
Interesting.
So that really does paint a picture of really long-term growth potential.
Yeah, potentially decades.
Exactly. So what should someone considering this information really take away from this point about the long runway?
Well, I think it raises a question about your investment timeline.
Okay.
Are you looking for companies that have the potential for really significant growth over many years?
Right.
If so, then the fact that Dutch Bros is relatively small right now, it hasn't even fully expanded across the U.S.,
right,
suggests that there's a lot of room for them to grow. And that growth could translate into higher stock prices down the road.
Exactly. Okay, so we've talked about the positive side.
Right.
But the article also touches on something important for anyone who's thinking about actually investing.
Yeah.
And that's the volatility of the stock.
Right. That's a key consideration.
They mention that the stock actually dropped 25% from its February 2025 highs.
Oh, wow. That's a significant drop.
Yeah. But they do put that into perspective by noting that it had gained 80% over the 6 months before that.
Okay, so it's been on a bit of a roller coaster.
Yeah, exactly.
Which is not uncommon for these kind of high-growth stocks.
Right, especially companies that are expanding really rapidly.
Yeah, they tend to have more dramatic price swings.
So the article points out that this kind of volatility means the stock might be better suited for, what they call growth investors,
right,
who are comfortable with these ups and downs.
Yeah, and who have a longer-term investment horizon.
Exactly. If you're someone who prefers more stable investments, maybe this level of volatility is something to think carefully about.
Absolutely.
Okay, so let's bring it all together,
Right.
Recap the main arguments from the article for everyone.
Sounds good.
First, Dutch Bros is doing really well in the coffee market.
Yeah.
They're even outperforming Starbucks on some key metrics.
Right.
Second, they're aggressively expanding their store count.
Yeah.
Which is a big driver of their revenue growth.
Huge driver.
And third, their current size and their limited geographic footprint suggest a lot of potential for long-term growth.
Right, both in the U.S. and potentially internationally.
Exactly.
Yeah.
Those are the three core reasons that the article presents as a bullish case for Dutch Bros stock.
And it's a compelling case.
It is. It's important to remember, though, that this is just one analysis.
Right.
Within the Motley Fool's broader research.
They might have other analysts who have different opinions.
Exactly. And opinions can vary, as the article itself acknowledges. So on that note, here's a final thought for everyone to take away from this deep dive.
Okay.
We've talked about the strong performance, the expansion plans, the long-term growth potential.
Right.
So what aspects of a company's growth strategy and its position in the market do you find most compelling?
Yeah.
When you're evaluating potential investment opportunities?
It's a great question.
It's definitely something to think about as you continue to, explore the world of business and investing.
Yeah, it's a fascinating world.
It is.
And there's always something new to learn.
Absolutely.